the market always likes to say, right, because there's this theme in the market, it doesn't matter until it does matter. So you're quite right. It will be on the public deficit when we have to go to auction. And if we don't see foreign buyers coming in or private buyers coming in, the Fed is going to have to be the buyer of last resort. Because if you don't, the rates are going to have to skyrocket to attract buyers. So that's a concern on the public deficit. The other part of this debt story is corporate debt. Corporate debt has skyrocketed. And why? Because the fact of the matter is yields are nice and tight, and it's a good time to go out and raise money. The question then becomes, what if the dynamic and the equilibrium changes? The Fed has basically promised we're not going to change how we underpin the markets, how we underpin, in essence, the credit markets. The credit markets are now really, as we would say, copacetic at this point. But if something changes, then the debt issue for corporations becomes a major issue. So you have the public debt, you have corporate debt that has basically just gone up dramatically during this easy money period.
Okay, so Quincy, in the meantime, like you mentioned, yields continue to drive markets today. I mean, if you see what's happening, the pullback we saw in U.S. Treasury yields, is the rout in bond yields over? Has it peaked, do you think?
Perhaps it's peaked just temporarily. I mean, for a couple of things this morning, you had the issue with the Turkish lira. I'm not saying it's causing jitters throughout emerging markets, but just enough to have that knee-jerk reaction to go into treasuries for safety. You also have a period now at the end of the quarter in which you have portfolio rebalancing. And normally, pension funds in the rebalancing at the end of a quarter will take profit from a strong equity market and then buy some treasuries. We'll see if they're going to do that this time. That will push down the yield a bit. But overall, if the COVID crisis doesn't pick up with more cases and restrictions, being put in place again, the fact of the matter is yields are due to climb higher. Although I think we do have a bit of a reprieve, a contrarian bet against the higher yields, I think also was at play. But yields, alas, are due to move higher as the economy opens and the global economy opens.